So today let us discuss about the income statement under absorption costing. Uh, One we have the absorption costing and next we have variable costing. So income statement under absorption costing we prepare like particulars amount. Then we include the first, that is sales. That means to calculate the sales amount we do sales unit, that is mentioned in the question, into selling price per unit, then the amount is taken as here. So now we deduct manufacturing cost of goods sold. If it is absorption costing, we keep here manufacturing cost of goods sold. It means we deduct the manufacturing cost of goods sold. They are like as direct material cost. Direct material cost means production cost into cost per unit, and amount is kept here. Likewise, next is direct labor cost. It means production unit into cost per unit. Like direct expenses, production unit and cost per unit, then the amount is taken here. So the variable manufacturing overhead is kept at both. It means it is kept at absorption costing also, and it is kept as variable costing also. Variable manufacturing overhead, it means production unit into cost per unit, then the amount is kept here. Likewise, we need to look out that whether it is variable costing or whether it is absorption costing. If it is absorption costing, then we write here fixed manufacturing overhead rate. If it is variable costing, then fixed manufacturing overhead is not kept here, it is kept under the non-manufacturing cost. But it is absorption costing, so we need to keep out fixed manufacturing overhead. So to calculate the fixed manufacturing overhead, we put production unit into fixed manufacturing overhead rate, but we do not know what is fixed manufacturing overhead rate. So to calculate the fixed manufacturing overhead rate, we look out on the working note, that is fixed manufacturing overhead rate. That means fixed manufacturing overhead that is given on the question and the normal capacity divided by normal capacity. So in this case we can calculate the fixed manufacturing overhead, and that amount is kept, that rate is kept here, then the amount is calculated. So in this way it comes out total manufacturing cost. Then we add opening stock, that means opening stock unit into cost per product, the amount is kept here. Likewise, we deduct the closing stock, we add the opening stock and we deduct the closing stock, then closing stock per unit into cost per product, and the amount is kept here. And we deduct here and the amount is kept here. Likewise, there is gross profit before adjustment, the gross profit before adjustment. Now we need to care about the over absorption or under absorption. In the variable absorption costing, we do not need to look out the over absorption or under absorption, but in the absorption costing we need to look out the over absorption or under absorption in only the case of absorption costing. So add over absorption of fixed manufacturing overhead and less under absorption of fixed manufacturing overhead. If we do add, we need to deduct the amount, but if it is less, then we need to add those amount, then the amount is gross profit after adjustment. Then we need to deduct the non-manufacturing cost. So under non-manufacturing cost, the amount which did not went to manufacturing cost, they are the non-manufacturing cost. Non-manufacturing cost means fixed office and administrative overhead, the amount is kept here. Fixed selling and distribution overhead, the amount is taken here. Anything that is directly affect the production, that is kept under the manufacturing cost, and those which do not affect the directly, they are non-manufacturing cost. Variable office and selling administrative overhead, the amount is kept here. Variable selling and distribution overhead, the amount is kept here, then the amount is adjusted. Then the last amount we calculate, that is the net income. So we can see some here notes, like if the production is greater than normal capacity, if the actual production is greater than normal capacity, that is over absorption of fixed manufacturing overhead. If production is less than normal capacity, then it is the under absorption of fixed manufacturing overhead in the absorption costing. Likewise, if you need to calculate the sales unit, we have the formula sales unit equal to opening stock in the unit plus production minus closing stock. If sales unit is greater than production, that is opening stock, we can calculate the opening stock. Likewise, if production is greater than sales unit, we can calculate the closing stock, that is the absorption costing.